As we turn our attention over to the grain markets now, it was a short trading week with the markets closed on Monday for the Juneteenth holiday. We were joined earlier in the week by Darin Fessler of Lakefront Futures and Options. I began the discussion by asking Darin about his general take on the sentiment in the market. Well, let's start here. What's your big picture sentiment on these markets right now?
Well, the big picture is, what does the outside markets do? I think there's so many correlations with 2008 right now. I don't think that they can be ignored. I think there's a lot of issues out there with crops. Obviously, it's not just Nebraska. It's the Dakotas. It's the Minnesota. It's still late parts of June. We got July. We got August. There's a lot of things that could still happen to this crop, but what does the outside markets do? We've had a lot of equity pressure. You see crude oil this week starting to really kind of maybe roll over there. RBOB's following suit. So crude oil has really led this commodity rally. And so if crude oil goes, I've still been in the camp that, hey, commodities could follow suit with which way our crude goes. If crude remains strong, I think the corn, bean, wheat market does remain somewhat elevated.
So I've heard lots that it's an outside market here driving the commodities, but also it's the weather market right now. Talk about the weather side of this equation.
Yeah, the weather obviously in Nebraska has not been friendly at all, and I think if producers looking at these weekly good, excellent ratings, I would take some of it with a little bit of grain of salt right now. Those will not move the market in this environment, I don't think. I think this is much more fun related. This is much more a macro issue that we're dealing with right now. And when you start to see technical pressure that we've seen in this market, corn, beans, especially wheat, it is a momentum trade. You got retail buyer or retail traders coming in here. You have funds starting to sell it, liquidate positions ahead of what typically is a seasonal bearish tendency. And then you have the rollover in crude, which is obviously having an impact on all of this stuff. But we're getting very, very close to some of these 100-day moving averages that must hold for the bulls here. Again, we have a lot of growing season left here, so I'm not going to count out the bulls just yet.
Well, it's been an interesting trading week. We had Monday, the markets closed, and just a couple days here on the books as you and I had this conversation. Not a lot of strength, though, in the markets. I guess we saw a rough day to start the week, at least.
Yeah, and I think it started last Friday. You get to that 9 a.m. to 11 a.m. Central, you look at those candles there on the charts, and we really saw some breakdowns. When I see bearish crossovers, meaning like the 5 and the 9-day moving averages cross over the 20s and the 50s, that's just an indication of momentum is shifting, the trend is shifting. And when we opened up Monday night, we really needed to see some strength, because we were hot, we were dry most of last week. We cut off a 3-day weekend. You would think that we would see some support in those markets. And even on the Tuesdays when we got those crop ratings, they came in less than what the trade estimates were, and we still didn't see strength. That's not what you want to see if you're a bull in this market.
Well, I want to get to a couple of our viewer questions because we did receive a couple this week. Daryl from Northeast Nebraska wanted to know, on the corn side of things, are the highs we posted back earlier this spring the high we might see for the whole year? Your thoughts?
That is a great question. I think it's one of two things. If the outside markets can calm down a little bit, we can start to see some consolidation, some upward mobility within the equity markets, the stock market, then I think potentially we run into some weather, I think we can make some higher highs. As of right now, I'm not going to say that. That's a certain slam dunk type of situation, but we do have a bullish balance sheet that could definitely present some very, very good opportunities if we have some weather here.
Next week is a big week, and to that point, Ben in Elwood, Nebraska had asked about, we saw the intended acreage report come out. Next week on June 30th, we'll see the planted acres report come out, USDA's estimates there. What are your thoughts on what that report could hold?
Well, I was completely wrong in the March timeframe. I thought the producer would be incentivized to go out there, plant the corn, but it was more or less a risk-adverse situation because of high input costs. If I listen to some of the CEOs of some of these larger input supplying companies around the country, they're saying, we didn't have a problem with sourcing seed, as far as corn. The farmer seemed like they've been risk adverse. So I don't think these corn acres change as much as people want to believe, especially with how late some of the Dakotas were. I think those producers up there were more inclined to plant beans, wheat, or some specialty crop. So I would say the clients that I have, if they're picking up ground, they probably were going corn. But again, I don't think these bean and corn acres move all that much.
I want to make sure I get your thoughts on basis. How are things looking out across the countryside there?
Very, very strong. I think the basis is going to remain very strong. The question is, do you hold to see what if the weather brings any type sort of issues for the production, or do we just sell it right now, play it on the board? I think those are the strategies that I think producers need to be thinking about right now. But I would definitely be taking advantage of the strong basis.
You posed the question, kind of answered it yourself, but to that point, when it comes to risk management advice, so what are you doing right now and what are you advising to your producers?
I think you need to have flexible strategies in place. Now, granted, I like having collar position on where you're buying puts, selling calls, and keeping it flexible in this environment, just because the balance sheet says, hey, if we run into weather, there could be some pretty big fireworks yet to come here. So going out there, utilizing HTAs, maybe some reownership on the board opportunities as they present themselves are the way I'm playing it.
Final word, about 30 seconds left. What else would you like to add this week?
I think the biggest key thing here leading up to the month-end reports is, one, the quarterly stocks, the acreage are going to be the determining factor for the July-August time frame. Granted, the funds are liquidating here a little bit. That does not mean they're going to not jump back in here. If we have weather, they're going to be certainly jumping back in.
Lots to watch. Darin, thanks for your time.
Thank you so much.